What's up, guys? Welcome back to the Everyday Money Guy. Today we're going to talk about the recent decline in the stock market. It looks like there is a fire sale going on right before the election. In October 2020, we're down about 7.5% on the S&P from the October highs. So what does that mean for you, and where's the opportunity in this? If this is your first time to the channel, please consider hitting that subscribe button to grow your wealth, increase your success, put you on the road to financial freedom, and also smash the like button for me. That really helps this video and this channel. So we've had a couple big days of big moves, over 2 or 3% on a couple of days, down 7.5% from the October highs. So what does that mean? As I said in another video, October in an election year, a presidential election year, is typically garbage. There is 59 years of data on the chart that I can put on the screen that shows that October is just always trash right before a presidential election. So we are dealing with just that investor mindset and just general market sentiment because there is uncertainty on how the next administration will run the economy. You know, if Trump should win, things would be like they were before. If Biden wins, things could be different in different industries. So there's just that uncertainty that is rattling the markets. In addition to that, we're still smack dab in the middle of the coronavirus pandemic with the so-called third wave happening right now. Cases are surging, and the vaccine is still a ways off. No one really knows when that's going to be. So those COVID-related concerns combined with the election, a decline that happens in almost any presidential election year in October, contributes to just sinking of stocks. This comes in the face of better than expected earnings and results from big tech companies like Amazon, Alphabet, which is Google's parent company, Facebook, Twitter. They all reported better than expected earnings, but most of their shares fell because, I don't know, because people sold off even once the earnings came back at higher than expected levels. So what does this mean for you? Well, I'm hoping that if you didn't have stop loss orders in, that you have stayed the course. Because the only thing that you can do now is if you sell those equities that you bought up at the October highs or whenever the last high was, all you can do now is just lock in your losses. So you just have to ride out the storm for the time being until after the election, until after the coronavirus pandemic is over, which it has to be at some point, and hope for the best moving forward. But what can you do right now? Right now represents a fantastic buying opportunity. Stocks are down, 7.5%. They could fall even farther, of course, so there is always that worry. But there is no way for anyone to name a top or a bottom of this market. So while the stocks are down from their record highs, would be the time to buy them because eventually they will return to those record highs and even farther. And so if you were looking back when the S&P 500 was near 3,600 and you were like, man, I really wish I had invested in either an S&P 500 fund or some stock that was doing very well, now in the future you can buy into those stocks at the prices that they were before so that when it is back again at 3,600 or whatever it is, 38 or 4,000 or 4,200, that you can be like, man, I'm glad that I had that when it was at 3,200, and now I can sit here with my gains and a smile on my face. And you might ask me, Mike, how do you know that the stock market is going to go back up? And all I can say is I don't know. But historically, stocks have always increased in value over time. Obviously, there have been several large declines, such as the Great Depression, the Great Recession, the dot-com bubble bust. All of these things have triggered massive market downfalls, but we are above the levels of all of those, by quite a bit in some instances. So historically, the markets will always go up. So even though we're down 7.5% from October's market highs right now. It's identifiable why we are doing that. Again, because of the election season, because of the coronavirus, because any mention of stimulus or not stimulus can send the markets either up 5% or down 5%. And that is something that will be on the radar after the election, is another round of stimulus. I could almost guarantee that there will be another round of some sort of stimulus either after the election or after the inauguration if the administrations change hands. So you just got to stay the course, stay in the game, continue investing, continue dollar cost averaging if that's what you're doing. If you're just putting in money every paycheck, which is essentially dollar cost averaging, it's just kind of forced dollar cost averaging. Just continue to do that, because right now the money that you put in will buy more shares than it did 2 or 3 weeks ago when the markets were 7.5% higher. So when they're 7.5% higher again, or 10% or 20%, you'll be that much better off because you'll own that many more shares of either the companies or the funds that you are buying. So guys, get out there and buy stocks while they're low, not while they're high. You know, everyone says that, but most times people buy when they're high and then end up selling when they're low and losing money. Remember what Warren Buffett said: be greedy when others are fearful, and be fearful when others are greedy. Right now, people are scared. This is probably a great time to invest in the financial markets. If you like this video, be sure that you subscribe to my channel. Hit the like button for me for the YouTube algorithm. I appreciate you guys watching, and I'll see you next time.